is Sabji Chaji and Rohan Singh recording a Charts Are Fun weekly session. This is the week of November 4th, recording this on after the market closed on November 8th, the Friday. Huge week. Market absolutely went ballistic with the pro-growth precedent as the market was expecting President Trump to drive significant growth ahead for the US economy. He won by a very resounding margin. 73.7 million votes was his 69.5 for Vice President Harris. There was also a sweep of the Republicans on the Senate and House. You often think the market likes a divided consensus between the Republicans and the Democrats sharing the House with the Senate, but this time it turned out to a sweep, and market thinks that this means that there's not going to be much of any obstruction to Trump's second term. He's going to do whatever he can to drive the US economy forward. Of course, he's got pretty interesting things that market does worry about from an inflation perspective, such as tariffs and also concerns on cutting down taxes, which could potentially increase deficits further. Market is absolutely rejoicing Elon Musk being by Trump's side more than even his vice presidential candidate JD Vance. Market absolutely is rejoicing that Elon Musk, the genius as Trump calls him, is going to be next to him, supporting him in a lot of the things that he's going to drive forward. There's something called the Department of Efficiency that they've discussed, and the idea is really to cut down regulations as much as possible. That's where the financials took off, small caps took off, and Tesla as a stock. We had talked about the Magnificent Seven, and we had said that the two that we were looking to really do very well in the next several weeks was Tesla and NVDA. We're going to look at both those charts. So today we will look at where the S&P 500 is headed. We had previously painted a target for S&P near 6,200. We'll see why we still believe it's getting there. We'll look at something interesting with respect to S&P was the yield curve steepening. What does that normally do in the past history? We look at that. We've just about uninverted the yield curve and got positive, the 10-year minus the 2-year. Just about as that steepens, we'll see what the market has done in the past. It tends to correct a bit, so we'll have to look at that. We look at QQQ, the NASDAQ 100 ETF. On the Magnificent Seven, we look at Tesla and NVIDIA. Those two have done really well this week. NVIDIA, of course, had another reason of doing so well. They got added to the Dow index, Dow 30, and that with the Sherwin-Williams both got added, and it helped NVIDIA get a bid. Though NVIDIA was moving up with respect to the AI story, still being very strong. And small caps that took off. We look at the IWM, the ETF for the small cap Russell 2000. We'll look at Bitcoin. Trump was proclaimed as a pro-Bitcoin, one of the first presidents to be pro-Bitcoin. He's even talked about a Bitcoin reserve for the US government and for the US economy. So it's going to be interesting to see how that impacts the Bitcoin prices. Technically, the chart looks strong. There are many who are forecasting a six-digit taking over 100,000, but near term, definitely a target towards 89, 90,000. We'll look at that chart. And then two emerging market ETFs. We'll look at the India ETF, INDA, and then look at the China FXI. So with that, let's just share the charts. So our YouTube site is Charts Are Fun. That's the channel, youtube.com/@chartsareFun. We appreciate you subscribing to our channel. And if you like the videos, if you could please hit the like button, we really appreciate that. Our blog site is in Substack. We've been publishing daily blogs. You can just subscribe to your email. You'll get the blog as soon as it gets posted on your email. And you can also check it out at chartsarefun.substack.com. And in this case, I'm just showing the archive, which has all the list of blogs we've posted so far. We started this service around February, so you'll see blogs all the way back for the last several months. As I said, I'm going to start off with something very interesting, a correlation of the yield curve steepening with the S&P 500. Kind of drawn it out here since 1975. So we're really talking about a 50-year history of the S&P 500. And the vertical lines indicate the time when the yield curve starts steepening from a negative yield curve, which is the 10-year minus the 2-year. That difference is what the yield curve measures. As that difference goes from a negative region to positive and starts steepening, we can see that initially, at least in the early 90s, we got a pullback. S&P got a pullback, and then from there it started climbing. Back in 2001, so after the dot-com crash, when the yield curve started steepening there, we could see that we got you know, S&P correct quite deeply at that time. Similar thing happened in 2007 when we yield curve yield curve didn't spend too much time in the negative territory at that time. It had from a very steep level come down towards the zero level, spent about a year or so in the zero to negative, slightly negative level, and then from there it started steepening again. And as that steepening happened a few months later, got a big collapse in the S&P 500. Could take 2019 to 2020 a bit of a misnomer because that yield curve steepening was led by COVID. There was significant, of course, liquidity in the market. It did take off, but there was a drop, and that's the COVID, kind of the drop. If you can think about, from a bigger scale, that drop meant nothing after the huge, huge climb S&P had after the initial drop. But nonetheless, we did it every situation with the vertical line. Whenever steepening happened in the yield curve, we got back a pullback in S&P. So far, steepening started off kind of last couple of months ago, more from the late September, October level. Steepening as in now it's in positive territory. 10-year minus 2 years at 0.05. So which is, not, it's only 5 basis points, but as this steepens, and that's expected, you can already see in that after the last rate cut on September 18th, 10-year yield, which was at 3.6, went all the way up closer towards the 4.45%. So market kind of said that, we believe that economy is going to strengthen. We believe there's going to be inflationary pressure. So market effectively took the bond market took the 10-year yield higher. Now, it's possible that because the short-term yields are impacted by the interest rate cuts, not the long-term yield, it's possible that as FOMC, as Chair Powell continues to cut, so he did do another cut. This is the second cut. The first cut was September 18th. The second cut came this week on Thursday. So that's on November 7th. So now we got two successive cuts. An expected cut is coming in December as well. And basically, as those cuts come in, you can expect the 2-year yield to start coming down. That starts mimicking closer towards where the Fed rates are. But the 10-year yield can effectively say what the bond market thinks about the economy, the moving forward. If the bond market thinks that there's inflationary concerns, the 10-year yield could keep climbing, and that could mean that we could start getting the steepening. This steepening here, in some ways, is a bit of a concern to the market, and we can't rule out maybe the market near term getting a correction. Now, what is the S&P, daily chart telling us? This is a beautiful cup and handle, 56.69 to 51.19, back towards that level, a shallow handle. That measure target from 56.69 to 51.90, you're talking about 550 point. At 550 to 56.69, that gives us to 62.19, 6,219. We've already crossed 6,000 today, closed slightly below it at 59.96, but we did cross 6,000. 6,012 the market touched intraday. Big volume in the breakout after the Trump victory. We can see that a gap up, heavy volume in that breakout. Potentially bit of, you could say, a negative divergence, but that could easily be invalidated. We can see that PPO is at a slightly lower high than in the previous time, and so is RSI to some extent, but RSI is already getting closer to 70. It closed near 68.81. It's possible momentum could be strong, and we could, in a melt-up fashion, reach 6,200 in the next few weeks, potentially before the end of the year, as far as the way the market's momentum is. In that case, once that target is met, bit of a concern on where we think the market could be after that. QQQ, which is the Nasdaq 100 ETF, has a cup and handle on its weekly chart. We saw the S&P on the daily, but on the weekly chart of QQQ, this is you could call it from 400 on the left brim of the cup down to 250 to 384, and then a handle formed, a beautiful handle, and then breakout. So if you look at 250 to 384, that is roughly 134 points. At the 134 to 384, that measures to 518. So 518, we are almost there, 514, 4 more points. So if any, we know that technology this week was not as big of a beneficiary as small caps, except Tesla. Tesla was a different situation. But most of the stocks, if you talk the Microsofts, the Apples, they were lagging this week. So NASDAQ, which is heavily influenced by those, you know, the big, trillion-dollar stocks, effectively may not have much more upside. 518 is only 4 points away from 514. So you got to see what happens to the Nasdaq. Well, S&P has got 200 points to climb, but the 200 points could easily come from the strength that we are seeing right now with the financials. It's got a lot of strength out there. Industrials were very strong as well. So other sectors could help broaden and make the S&P get these additional 200 points. And XLK, the technology, may be a bit of a back seater. That said, NVIDIA earnings is coming up on the 20th of November. We'll talk about NVIDIA. There is more upside on NVIDIA, and that could help S&P climb as well. On its own, it'll help the NASDAQ 100 climb as well, but then realize if the others, Apple and Microsoft and others don't move up as much, they may have a little bit of a dampening effect on the NVIDIA-related NASDAQ 100 contribution. That said, Tesla is a beautiful cup and handle on its daily chart. 271 on the left brim, came and touched 182 on that August 5th pullback, 273. So 182 to 273, we're talking about a 91 point at 91 and a half point. 91 and a half to 273 one and a half is 365. That's where we think Tesla is headed. It touched 328 already today, closed near 321. They could be with the momentum already. RSI is at higher high, strong strength there. PPO is climbing to a higher high from the previous PPO level. So momentum is there. Momentum is there. AD is at a higher high. It's all set up to from here, and it only like in a span of 3 days. Look at the percent move, right? 8% today, but it was literally 8 to 10%. So it basically moved close to 25% plus in within just this week. It's just absolutely amazing. It was somewhere, if you see these 5 days, it was somewhere near the 240 level to 321. So that's roughly what 80 out of 240. So 80 out of 240 is like one third, 33% gain. It's just absolutely amazing the kind of climb Tesla had within just 1 week. Well, we know that Elon Musk is going to be by Trump's side. There are expected benefits that he may get through his close relationship with President Trump. People believe that Tesla's key competitive differentiation is their robotaxi. It's their autonomous driving. In the previous administration, he wasn't quite getting all the support he needed from the transportation department to give him approvals. Maybe that may come through with regulatory concerns being relaxed under the Trump administration. Elon Musk could be a direct beneficiary. Also, the other benefit that he may have is if these EV tax credits, in many ways, the tax credits that American citizens get to buy EVs is removed, the big autos that sell EVs would effectively be less incentivized to sell their cars. They may start backing out, and it will leave Tesla with full monopoly in the EV market and get more market share out there. So those, and then in particular, his big business model of autonomous vehicle and robotaxi is what the market is extremely excited about. It's now a $1 trillion stock. It took it 3 years. Back in 2021, it had lost the $1 trillion status. Now it's back again, a $1 trillion stock. Looking good for Elon Musk for sure and the shareholders of Tesla. NVIDIA has got a beautiful ascending triangle pattern. This one at 140 level is where you could see the horizontal resistance level, and the higher lows is where the ascending part of the pattern is. That measured target is 188. We hit 148, 149, 150 this week. So it's not like we're talking about $40 jump in the next couple of weeks till the earnings is possible. And NVIDIA, once it touches 188, I feel that it is getting a bit stretched. It's already at, it's like maintain now a margin of over 200 billion from Apple. It's distancing itself from Apple. Initially, they were quite neck to neck in terms of market cap. Now, NVIDIA is the biggest market cap stock in the American exchange, in fact, in the world. So it's expected to continue its lead, and so it's almost at 3.6 trillion market cap. And tacking on another, so from 150 to 180, you're talking about what, 30 dollars. So $30 is 20%. So 20% from a 3.6 trillion market cap will get it past the 4 trillion. I mean, think about it. I mean, 20% climb from that level, from that 3.6 trillion, crosses it past the 4.3 trillion. So that would be an amazing feat if NVDA can achieve it in the momentum that it has right now. Small caps absolutely took off. This is also a beautiful, similar kind of pattern as you saw on the NVIDIA chart called an ascending triangle. 227 is the horizontal resistance level that it broke out of. The rising lows here, you can see breaking out. That measure target is 258. We touched 238 this week. Strong momentum, big gains after that gap up after the election results with heavy volume. If that momentum continues and small caps continue to benefit, we can see RSI strengthening at a higher high at 72. PPO is climbing. AD is also begun. AD was kind of like flattish. It wasn't doing so well for most of this summer. Now it has begun to climb. Money is moving into small caps. So with continued momentum and this move higher from the 238 and tagging another 20 points to go to 258 can be ruled out in small caps, something for us to look into. The other thing small caps are benefiting is the interest rate cut. Lower interest is of huge help to the small caps because they need to raise capital. They prefer lower interest, and that helps the small caps. The other key thing that small caps are benefiting from is the dollar has strengthened quite a bit. Dollar strength impacts the bigger corporations, the bigger companies, because a lot of their business is outside the US. This dampening from a strength dollar as that outside the US currency, that revenue gets converted to dollars. Small caps are primarily US-based companies. They sell within the US. So money effectively could be rotating out of the bigger cap companies and rotating into smaller caps also as a, call it a hedging as the dollar keeps strengthening. Another big beneficiary of the Trump win was the Bitcoin. He was kind of called as the most crypto friendly president ever. He went to a crypto conference in July and he said that he would plan to start a crypto reserve for the US country. And that you can see it broke out of that ascending triangle around the 70K was the resistance level, rising lows. That measure target is 89.9, 90,000. That's just a near-term daily chart. But if you span this out to the weekly chart, that target is even way above 130,000. Why? Because of 73.8 and the low of that. In fact, if you just draw the weekly chart, I'll show it to you right here. There is a beautiful, so you can see this cup here from 15.5 to 73.8. That right there, you're talking about what, 60,000, 58,000, right? So 58,000 added to 73.8, you're talking about 131,000. That's where Bitcoin is headed in the next several months. But near term, the expected move towards 90,000 is where Bitcoin is headed. I said I'll end with the two key ETFs of the emerging markets. Start with India. This is the MSCI India ETF, INDA. It is potentially forming, call it a head and shoulder top. The left shoulder formed, so around the 54.2 is the neckline. The left shoulder formed in the early part of June, July. That's when Prime Minister Modi won the re-election, went to 57.5, pulled back in the July to the August timeframe to 54, then went on another climb to a higher high at 59. But look at the declining momentum. This is a weekly chart of INDA, by the way. So you can see that RSI is at a lower high than the previous RSI strength. Same thing with PPO is weakening. And then PPO kind of broke down, kind of in the histogram going negative, divergence in the red and the black line, and PPO started declining. That potentially could be setting us up unless it can take out and start climbing and break above 59. This could potentially be setting up for a right shoulder move from 54 to 57.5. Then a breakdown. That breakdown measures towards the 49 level. So that's something we need to watch. And if the S&P 500 reaches 6,200 or 6,200 and starts pulling back, and we see a pullback in the other markets along with the US, they could be 2025 could turn out to be a bit of a correction year because we've had a very strong move the last couple of years. And potentially, we know there's a cyclicality. Every couple of years we get a pullback. So the last big pullback was in 2022. So we could be setting up for a 2025 being the next pullback potentially. So that's something for us to look at. The other thing I would like to share is the FXI, which is the China large cap ETF. This is near term inverse head and shoulder. There's a gap, as we can see, that it left near the 36 level. So right now it's potentially a left shoulder here. The neckline is around 33.6. The left shoulder is around 32. Head is around 30.65. The right shoulder is just formed around 31.2. That break higher, it measures the $3 level from 30.6 to 33.6. At the 3 to 33.6, you're talking about 36.6. And that'll help close out this gap that was left. And that could be a lower high from 37.5. And that could be then a point from where the China could also pull back, just like if US has to pull back, India has to pull back, we could effectively get a worldwide kind of a correction, something for us to look into. With that, happy trading. Was a pleasure sharing the charts this week. To sum it up, market is expected to go little more higher. Small caps would be a beneficiary. Expect the IWM to head towards a target, as I shared here, towards the 258 level from where it closed today near 220, 238. So another 20-point rise in IWM. Expect NVDA to do well, likely hit the 188 by earnings and maybe right after earnings. Tesla's got some more upside towards the 365, closed near 321, so another 40, 44 points in Tesla is expected. QQQ to me is getting closer towards its target at 518. We'll see how further it rises because if NVIDIA has got to go to 188, it'll definitely provide some more upside to QQQ. But then, as I said, there's dampening effect on Apple and Microsoft and others not really falling up and rallying as much. So we'll see how QQQ, trades over the next few weeks. S&P 500 target is 6,200. We touched 6,000, another 200 points. We could, at the rate at which S&P is climbing, we could easily get there in the next few weeks. So with that, again, happy trading. We'll talk to you next week. Thank you.